All right, so welcome to another video. Today we're going to take a look at a butterfly option strategy on Tesla. And if you didn't know, Tesla is going to be split up here very soon, supposedly, just based on some of the news that may come with it. As we check some of these things out right here, you can see Tesla stock split overpowers China shutdown, blah, blah, blah. So anyway, so they're looking to split the stock eventually, which, you know, the stock continues to kind of go higher. And usually when the stock splits, it does continue to go because now more people can get into the stock. So we're going to chat a little bit about this. And I'll give you some thoughts on a strategy idea. Keep in mind, if you want to grab my insight, you can definitely check out the Traders Fly website right there. And go to the freebies. There's a ton of freebies that I have. You can grab a one-on-one coaching session. And we have a lot of live classes here coming up, something about market seasons here soon. And then we also have a risk or raise class we just did. You can also join the Discord channel. This you can ask me questions. People ask questions all the time. You can check out some of the stock movers and charts that I post as well in the Discord channel. It's like a chat room, but for some communication ways that we can handle it. Okay, so let's go in and just look at a Tesla concept here. If we just go in, and I'll just show you my recording area here. This stock continues to press higher. So as we look at this downside line, the breakout right here was, you know, just recently in March, just about a week or two ago. We've kind of held this base at around 800. So I talked about that on my critical charts channel not too long ago. So if you want to go ahead and check that out, you can go there. So 800 kind of handled and stayed here at the support. And what I want to do is, when we look at this $800 price point, this was the support level. So now this stock is already very extended, you know, from just a extension standpoint. I think, you know, we could go more higher, or just could push into some further higher prices, even this 1200 back in there, but it's just the angle is just so high. So you could play this two different ways. One of the first ways you could play this is that, okay, can it come back to the average and kind of retest the $1,000 level? Sure, it could. Or you could play it to the upside. So I'll give you kind of two choices here. Is that you could create a butterfly strategy. Like, let's say you are bullish in the stock and you think it'll continue to go. What you could do is do a little bit of a longer term, depending on, you know, maybe a month or two. It could continue to press higher, maybe a couple of weeks. What you can do is go in and position it with a butterfly strategy, something like, let's go into a Tesla. And the way that I would construct this is, let's say we're going about 25 days out, okay? And they're budgeting approximately a 150-point move, either up or down. We don't know if it's going to go up or down. So budgeting a 150-point move, you're kind of looking at, okay, 150 point from where it is right now, 25 days out. You could say, okay, well, maybe it won't go full 150. What if it only goes about 100 points? Well, if it goes about 100 points, then we'll just add, you know, place our butterfly around the 1,000, maybe $200 level. And I could say, hey, well, on the bullish side, it could keep going, you know, and even if the stock splits, the options will just split themselves and get reconfigured. So we'll go ahead and we could create a butterfly strategy. And I could say, hey, I want to be bullish, but I don't want to be as bullish as maybe being as aggressive as selling vertical spreads or being even a diagonal or something like that. Because if you go ahead and do like a diagonal spread or doing something else, it could just be a little too aggressive. So what I would do is kind of position it, you know, about 100 points higher, and then split this up on the butterfly a little bit wider, maybe 50 points, maybe 70 points. If you want to be a little less aggressive, just do 50 points. If you want to be a little more aggressive, you could do like 70 points between the strikes. And now what you've got is a trade that basically has almost no theta. Really, it's a little bit of a positive theta. This is known as a bleed, so it goes outside your expiration range. And if it keeps going higher, you're good. However, if it does pull back, you're not losing as much as maybe a vertical spread or something like that. Because if I go ahead and position, let's say, a call vertical spread in that same area or range, you're just going to pay a lot more. Butterflies are very cost effective. And if you want to reduce your risk even further, just tighten up the butterfly. And you could do something like this where you're risking $373. And if the stock pops, you know, you have a potential to make quite a bit more. So you could say, okay, well, If we go ahead and we're risking 373 and we make 291, you know, it's almost a 1-to-1 risk to reward there. And even if it stands still for a week, you could still get out of this trade if nothing happens. You could still be profitable at 35 bucks. And this is because the theta, even out here, is still positive. That's kind of the nice thing about this trade. Now, let's say you're bearish. You say, hey, the stock is too extended. You could do the same thing. Now, you could also do something shorter duration if you like. So I'll give you that version right now. Let's say I go 17 days out. The expected move's about 127 points. So again, let's just say about 100 points down. So it could go back to the 1,000. You're saying, hey, it's going to go back to pinning. It's going to pull back. You know, we're just extended. And I get it. I get that version of it too. Like, look, we are extended. We gapped up. We filled the gap. Okay. So if you got a bearish view on it, you could also do a 1,000 point, you know, back to the $1,000 price strike, and you could position it there because all you needed to do is kind of come back into that and you take the trade off. So it's just kind of looking at the probability of touching rather than expiring. These butterflies, you don't let them go to expiration. You're just kind of bringing it into the probability of touching. So let's say it goes back into about $1,000 right here. I could buy a butterfly. Now, why shorter duration? Because when it pulls back, you're going to get an increase in volatility, and that will actually hurt a longer duration butterfly. So I have to usually go a little bit, you know, I got to go a little shorter duration to offset and get a little bit of a stronger theta there. So I could go create a trade like this. And then what I can do is, again, spread this out. I could do it on the put side. I could spread it out again about 50 points on the downside, 50 points on the upside. And now I've got a butterfly right here where it can pull back. Now, notice a little bit of the difference here. Again, it just also depends on, you know, the range of movement. And this one is also shorter duration, but the cost here is about $690 for this shorter duration, whereas the longer duration is actually about $260, $350 that we looked at. So if I do a shorter duration and I'm kind of positioning it at, you know, at about $1,000 strike, it's actually a little more expensive for me just because of that. So if you want to keep it in that $300 price point, just go ahead and tighten up the strikes, and you could go in right there and just tighten it up to about a 30-point difference. And now what you've got is, look, your theta is nearly not positive, not negative, but it's nearly zero. Let's just pretend it's like, hey, it's close enough, right? You're losing about $1 on theta here, which is not a big deal. So if it hangs around here, you know, you're hitting a little theta, but not too bad. But if it pulls back, you have a really nice potential because now as it starts moving down this way, that theta starts to pick up very quickly because it's shorter duration. And then it'll start picking up some speed. So anyway, let me just, I reset at that time there. Actually, your theta is about 2.9 because I had the date there that was looking in the future from the earlier part of the trade. So you can see you got a little bit of a positive theta, nothing too significant, but after a few days, that theta will get into that negative zone if you still hang around there, and it'll pull back. And then look, you're risking 250 maybe about to maybe make, even if it goes back a little bit for 1 day or two, you can make 150. So, you know, it's not a bad risk to reward. So you could lose like 3 or 4 of these trades and then make one and you're okay. So you can have 4 or 5 losses. And this is what people don't get is you could have 4 or 5 losses, make one, and you're back to kind of even. Because these trades have a higher return, but the probability is a little bit, you know, stinky sometimes because you have to bring it back. It has to move in your favor because if it moves up, you don't make money. If it moves up, you also lose theta. So there are some of those kinds of issues. But in general, if you go ahead and, you know, position them and you position them lightly, you could set up a trade like this, let it try and work over the next week. But you usually have to be prepared to maybe lose that full investment on these trades. So if you put on 250, pretend you might lose that full 250, $300. So don't go too wild with 90% of your account on these trades. But if you just get a little pullback, you take the trade off and you're good to go. So anyways, so those are a couple of versions. You could do like a bullish spread for maybe an upside move right there. And you could do it a little longer duration because my expectation with a little longer duration is saying, well, what if it pulls back for a couple days? Because the stock is a little bit extended. So already right now, what if it pulls back and then it goes higher? Then we need time for that trade to work out. However, we're already extended. And if we just get 1 or 2 days pullback, if I do a negative or bearish or, you know, selling it kind of short to the short side, if it just pulls back in the next few days, that's where I might do a shorter duration because we're already extended, just a couple day pullback and a little bit of theta. I could do something a little shorter duration. And also it helps eliminate the positive vega. And then you could get into this, even if it pulls back, you know, 20, 30 points, a couple of days of theta, you could already take that trade off. So those are kind of the ideas you could do with a butterfly with Tesla right now. Obviously, keep an eye out for the earnings. You got 425, so make sure you're trading a shorter duration than that, or at least taking the trade off before then. But this is kind of a couple of ideas for you on a butterfly trade. They're very cheap and cost effective, rather than doing a vertical, diagonal, iron condor. They just require more capital, and you just use a lot more power, buying power, than you would on something like this. This is a much more defined spread, and if it does pull back, you just take it off. You don't have to wait for this line or curve to get like really high, all the way up there. Just a little pullback would work fine. And on the upside, it gives you a little bit of cushion. If the stock does pull back a bit and then continues to move higher, it gives you a little bit of cushion. However, the downside is if it moves up very quickly in the next day or two, you don't make as much on your money here. So anyways, those are a couple of ideas for you. Hope you enjoyed them. Thanks for joining me. Definitely check out some of the classes we have coming up. We've got the market season coming up April 25th. Hope you join us. There's a lot of also great freebies here on check out the trading journal, mini courses, and much more. So anyways, thanks again. I will see you in the next video and episode. Remember to subscribe if you're brand new for some more educational content and videos, and check out the Critical Charts channel if you want to take a look at some technical analysis and chart analysis videos there as well. All right, I'll see you next time.